Hello everyone. Today we are going to discuss a very important topic relating to the property transactions where the property is situated in India and the seller is a non-resident. In this case, the Indian income tax casts two important responsibility on the buyer, which is number one, under section 195 of the Income Tax Act, the buyer has to discharge his obligation to withhold tax on the income arising out of that transaction. So in that case, the income arising out of that transaction. And the second important responsibility is under section 163 of the Income Tax Act, if the tax deducted by the buyer is less and if the tax is not been deducted, then in case the non-resident do not discharge his responsibility voluntarily, then the income tax department may turn on the buyer and can recover whatever tax due on the income arising out of that particular transaction. So now the question arises how the buyer can discharge his obligation in both the situations. So number one, in the first situation under section 195, the buyer is required to withhold tax on the income arising out of that transaction. So first of all, he has to ensure the seller is a non-resident. If seller is a non-resident, then he declare himself as a non-resident, then there is no issue. But if he does not declare himself as a non-resident, then in every property transactions, the buyer has to ensure the seller is whether the seller is a resident and non-resident, and in that case he has to take the copy of his passport of at least 2 years, so that he can see whether he is a resident or non-resident as per the Income Tax Act, which is section 6 of the Income Tax Act. And while after deciding this whether the seller is a resident or non-resident, if the seller is a non-resident, then for fulfilling his first obligation under section 195, he has 4 steps. Step number 1, he, while discharging his responsibility, he can deduct TDS on the whole amount, on the gross amount at the rate prescribed under the Income Tax Act. Second, because the tax has to be discharged on the income arising out of that transaction, then obviously in the property transactions the complete value is not a income arising out of that transaction. Obviously there must be a cost of acquisition or cost of improvement, whatever. But in that case, the second option with the buyer is he can just take the document from the seller and calculate the capital gain or the income arising out of that transaction. Based on that particular income, he deduct tax as per section 195. The third option with him, to ensure it properly, he can go to the assessing officer under section 195(2) to ask to get a certificate from the assessing officer, like on which amount he will have to deduct tax out of this particular transaction. And the fourth and the last option is he can request the seller to go to his assessing officer and get the certificate issued under the provision of the Income Tax Act, where for the lower deduction or no deduction on that particular transactions. So based on these choices, he can discharge his responsibility under section 195 while making the payment, deduct tax and pay the tax and do all the formalities which is required under the provision of the Income Tax Act. So now the second responsibility which has been cast under section 163 of the Income Tax Act, where if the tax is not being deducted or not paid by the non-resident on that particular property transactions, then the buyer will be deemed as the representative assessee for the non-resident, and the income tax authority may turn towards him and recover whatever tax due, including along with the interest and penalty from the person who is buying the property. So this is a very important aspect in which the buyer has to be aware, like he has to comply all the provisions of the Income Tax Act. the difference between the buying property from the non-resident or from the resident. From the non-resident, because section 195 is a complete code in itself, in which the buyer has to calculate the capital gain and deduct tax on the income arising out of that transaction. But in the other cases where the resident, in case of the seller is a resident, then he has to deduct a certain 1% tax and deposit it, whatever is on the gross value. So he is not required to deduct on the income, but he is required to deduct on the deduct tax on the gross amount. And second important aspect is, if he is not able to, if the resident is not able to pay, then the income tax department will turn on the seller, not to the buyer, and the buyer will not be considered as a representative assessee in the case of the resident transaction. So the transaction with the non-resident, where the non-resident is a seller and property is situated in India, is very important aspect. One has to be very cautious and take all necessary steps under the Income Tax Act. Thank you so much.